Well, after the left did its best imitation of Rowan and Martin's laugh-in, what's next for the markets? What's up, everybody? Welcome aboard to Bubba's Bottom Line. It is Sunday. It's February the 11th, 2020. And what's going on, everybody? Well, how about our Kansas City Chiefs? There you go. Finish off the season in a flurry, but here we have it. And, of course, I guess we could start with, I don't know where we can start. We could start with the impeachment that is no longer happening. Of course, now Nadler and the other idiots are now looking for something else to find instead of working on the election, which is in 7 or 8 months, and it'll all be over one way or the other. But of course, that is about the only way that they're going to be able to win is to get the president out by some ridiculous thing. But here we have it, and of course, we can talk about the Iowa caucuses, which might have been the most laughable thing ever, or the ridiculous debate the other night. It doesn't matter. Okay, I mean here we are. Okay, it's evident and obvious that the left is more interested in getting the president out because they can't win any other way, versus taking care of the American people and doing what their job is and what their job description is, which is to take care of the American people. But hey, look, it is what it is. It's the same old in politics, and I'm sure the right would be doing the same thing on their side. But of course, it doesn't matter right now. You've got an economy that's full steam ahead. But before we get there, we do have to discuss the coronavirus and what effects it may or may not have on the markets this week. And, obviously last week, at the beginning of the week, and of course Friday in, the outbreak did create some fear in the markets. And of course, now there was no fear, but all of a sudden, we have seen that the virus has now surpassed in deaths the number of SARS cases and its outbreak. So again, will it have an effect? I would tend to doubt it. Again, I think money knows no problems. Okay, and when you've got the cheap money, okay, when you've got the Federal Reserve and the central banks around the globe continuing to keep money cheap, it allows the rich to get richer. It allows them to continue to borrow money at ridiculous rates, okay, and continue to pour into a business. And it goes back to the same formula we've discussed many times in the past, which is if you know you can make 10% on every dollar you can take in, okay, and you can pay 2 or 3% to get that money, how many times did you make that trade? What a nice arbitrage that would be, right? Pay 3, get 10, net 7, and be done. Okay. Of course, that does lead to the potential impending bubble. But again, we'll talk about that in our markets. But we're not calling this a bubble. As uncautiously as the cautious investors are investing, and of course, this is again, it's almost a repeat, okay, of what we see over and over again in markets. Now, again, we're not predicting anything, okay? So let's be clear. We are not predicting anything at all from here, okay? The markets will do what the markets will do, and when they decide that they no longer want to go higher, they will start to go lower. But I think, I think that you have to look at, the way some of the money is now flowing in, okay? And at the speed in which it's going in, again, we can't miss out. You saw Tesla last week run up almost to $1,000 a share. Now, I love the Tesla car. I think Tesla's worthless. But again, I tried to show it earlier. I had to give up. Now, is this being played by, for example, if you remember the Herbalife thing with Bill Ackman, and he kept fighting against Carl Icahn, and of course, eventually Bill Ackman had to pull out, and Herbalife did its thing. Is this the shorts fighting Tesla, or is this a real rally that says the company's really got legs? That we really don't know, okay? It looks like they finally made a little bit of money. Again, we'll see how that all plays out. But at the end of the day, Is that more like a tulip mania kind of run up? When you've got the big short squeeze? We don't know. Jeff Bezos dumping 4 billion shares of Amazon stock. Now, many will take that as a big negative. And I will say straight out, okay, this is no different than when Larry Page dumped a bunch of Google many, many years ago. And what he said was, why should I keep all my money here? I mean, I can lock up $4 billion in Bezos' case, and no matter what happens, I'm fine. So again, if he was hedged, the way we teach it, he wouldn't have to worry about it either way. He wouldn't have to sell. But I have no issue, and that does not concern me, that the man is taking some profits off the table. Okay, certainly you would want to lock up the fate of your family for the next billion years by taking $4 billion out of your company. I see no issue. That does not concern me whatsoever. But you'll watch this week, and I guarantee if it's down a little bit, they'll be saying it's over. Okay. Now again, we don't make those predictions either way. Okay, but I think it is interesting that it is already a story, because it's really a non-story. Again, all you have to do is just look in the mirror and say, if I own a company that I can take $4 billion out of, am I going to put that money in my pocket? And the answer is, of course you are. Okay. We're still seeing issues with the repo rates, the Fed funds rate. And again, this is just another piece of information that just says that there are things out there that don't make sense. They're not logic, and they do have some issues. But again, don't think that that's going to make the difference tomorrow. It certainly could. We don't know yet. But right now, we are not saying anything but that we're still in the same position we were. I mean, you've seen, okay, a bunch of things going on, okay, and I think that at the end of the day, the markets will play out as they always have, okay, whether you go back to tulip mania, even probably before that, but they always play out how they're supposed to play out eventually, and eventually this equity market will crack. Eventually it will go back, it'll be over 30,000, okay, because if you just go by the simple formula that since the inception of the U.S. equity markets, they have gone up 8.5% year over year on average. So again, but if you're chasing in up here, maybe a little bit risky, but they are forcing they are forcing everybody, okay, into the markets, and of course that is a concern, okay, because again, you've got people that hate being in. Okay, you have some of the elderly, some of the retirees that are probably not sleeping at night right now, knowing that every morning they wake up, they just pray that the markets are not getting clobbered. Okay, but again, you've got all kinds of things happening, but yet the markets managed to push to new highs. So are we going to say that this is a major concern? Now, again, we'll see how the reaction is. I really don't have any. I don't even have a good guess today of what the action will be like tonight. Again, I wouldn't expect to see much. I believe that between the big banks and between all the big money and the way that information flows, somebody already knew about that. But we had a great jobs number on Friday, and yet the markets were lower. Okay, and again, that goes down back to market expectations. But this has become the comedy hour, again, with between what's going on with the impeachment trial, which is now over, with everything else that's happening. I mean, it is absolutely a joke, and it looks like you will end up with a split party on the left, and it looks like if I were to bet right now, I would bet that Bloomberg will get the nomination unless somebody out there is not in yet, which could be, of course, Hillary. Okay, but we'll see how it plays out, and we're not going to be concerned. But I think there's some big news potentially out there, and something to keep an eye on, and that is the potential. I think the UN has got involved talking about marijuana. okay, marijuana stocks. And if the federal government finally approves the legalization of marijuana, which I don't understand why they have not. I mean, again, I'm not a user, but I certainly don't have a problem with it. I see nothing wrong with it. And of course, if they do legalize it, it opens up those stocks that are battered and beaten down into some heavy buying. You know, the good companies that are considered good will be then those that can be bought. And of course, they will then go into the funds, which would obviously create a lot of buying interest. So I would say to you, okay, and I'm not recommending anything, but I would say to you that, you know, if you are looking at something and you're looking for a gamble, that might be a place to look. Because again, you know, the biggest issue, I think, is always is the taxing part of it, okay? And of course, the governments want to tax more than they make. So that's the same thing with the sports gambling, right? You know, if you don't understand sports gambling, a bookmaker, a true bookmaker, makes 5%. Okay, he makes 5% of the handle, the amount of money that's bet. Okay, one guy pays a 10% juice, the other gets paid. Okay, so it's a net 5%. That's the true model, is how it's supposed to work. The government wants like 8%. Well, that's not a very good deal if you're a bookmaker. So I think there's a lot of things going on there. There's a lot of things in the market. There's a lot of crazy news going out there. But at the end of the day, okay, the markets will do what the markets are going to do. Okay, do not think that you can be smarter than the market because the market's always right. Don't think you can outguess the market because you'll lose. And if you try to trade the news, you will for sure lose. Okay, it's really that simple. This is Bubba's Bottom Line. Todd, Bubba Horowitz. We're going to step out here for a break, and we will be back with more of Bubba's Bottom Line after the break. Well, everybody, we did a great webinar yesterday on our equity portfolios. And of course, we said it straight out. We had a drawdown last week. But again, we don't worry about drawdowns. It's not the business. The business is to continue to get the equity curve to go higher, which is what we're doing. So again, you want to hear that webinar, just email me at bubba@bubbatrading.com. It's free. If you want to hear about our hedging program, you want to hear about our futures program, please feel free to email me at bubba@bubbatrading.com. And of course, this Saturday, the 15th, we are doing our farmers marketing plan, hedging and marketing for farmers. You can sign up for it on the website. And if you can't see it, you can email me at bubba@bubbatrading.com. And of course, don't forget our trading partner at Tradier Brokerage, okay, who will give you basically 0% commission, zero commissions, excuse me. And of course, if you want to get there, don't go to their website. You're going to have to email me to get a special link. And also don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, Todd Bubba Horowitz. Welcome back. It is Bubba's Bottom Line. It is Todd Bubba Horowitz, and it is Sunday, the 11th of February. I can't believe it's going so fast. Valentine's Day is coming. In the meanwhile, okay, as we said, we thought that maybe last week that maybe the tops of the market were in. Everything looked lined up like it could be. And of course, what happened? Bang, 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 boom, brand new highs. Highs across the board with the exception of the Russell. The Russell is still the weakest. And in our call last Monday night, we said, you know, the short market is in play now. You can play either side. But we would look to be shorting the Russell if we were going to short anything. Now, we were not aggressive, and we don't want to be aggressive here. We are net long. Okay, the bottom line is we, are long. We are long all four major indices. Okay, and again, we will be long until our algorithms change to make us short. But we are, obviously equity. Most things that we own are now long again. We went through a little bit of a period, which is obviously what causes the drawdown, and it's not the direction; it's just the whipsaw. But obviously, we had some fairly big moves. I think one thing very important to hold out for and look at is the simple fact that the VIX, the volatility, although we had a huge up move, did not go back to the lows. Okay, that's something to take a look at. Okay, now it doesn't mean today that there's anything, but what it does mean is that the VIX should have, by all rights, making a new high, the VIX should have made a new low. It did not. Okay, in fact, it not only did not make a new low, but it was 20% higher than it was the last time we made a low. So that is a small indication that there are firms and funds and maybe individuals that are buying some protection, because the VIX index runs basically on put options being bought to open. So we'll see what it looks like. But at the end of the day, there are signs out there that there is some fear somewhere. The U.S. dollar charging higher last week. Now, the dollar is a fear asset. Okay, so the higher dollar created a huge move, and now it looks like it's headed back to par. Okay, it went down and tested those lows and immediately spiked back up and is flying. Okay, the Treasury bonds, we're down a little bit for the week. We're still long the dollar, by the way. We're still long the Treasuries, which were down a tad last week, which only is saying that they're not really sure. But I believe that there's probably a couple of rate cuts priced in, and I would expect to see the bonds go back to rallying, especially if there's any fear from the coronavirus and from some of the other things going on around, because again, that's the second fear asset. So the fear assets are the bonds, the dollar, gold, and the VIX. Okay, gold was down last week, but again, it really held nicely after back-to-back pounding days, and where it sold off almost $50. Okay, in South Philly, it's worth $50. Well, gold sold up, but it did hold exactly where it should have at support. Okay, and I think this is something that is important when you're looking at it from a technical standpoint. And now, if there is going to be some true fear, even though we don't use it as a fear asset, we know that many do, and there will be a charge. But if I look at the metals in general, okay, silver continues to look weak, okay, and looks like it's going to test the lows. Gold continues to look strong. It looks like it can test the highs. And copper, although had some up days last week, looks to be headed south again, which again would be more of an indication of the overall economy, Dr. Copper. Okay, but again, remember, the correlation of assets does not always take place at the exact same time. Okay, so sometimes it takes time to think through and to actually work its way through, which takes us to the grain markets. Now, we had China last week decided that they were going to cut their tariffs down on the imports of some of the things, especially beans and things like that. Well, I get news for you. Okay, the action in the grain markets was brutal last week. Okay, now we did have a little bit of a rally. I mean, but you look at the size of the sell-off and then compare it to the amount of the rally you got. That is not a very good dead cat bounce. I think what you're really looking for here. Now, we are short soybeans. I mean, we're short grains across the board. Okay, not just soybeans. We're short grains across the board. And just to reiterate, we're also long gold, short silver, and short copper. But as I look at the grains, I go, why didn't they get a better bounce? Why wasn't there any fear? Well, the shorts are still firmly in control. Okay. Now, personally, as you know, I hate oil. Well, I hate being short grains at these levels. Okay. But again, I have to follow the mechanical methods in which I use. Otherwise, they don't work, because I cannot change the dynamics of what I do. Okay. But at the end of the day, okay, I would think there's a little bit more room to go on the downside, although wheat still looks pretty good. Corn looks better. It held some major support. Beans look brutal. Okay. Now, again, key numbers to watch in beans this week: 880, which where we are, 860. And then if they get through 860, 840, here we come. So it's not a great situation at the moment, but we will continue to monitor and stay in our position. Of course, the meats, the cattle, just, it doesn't see, again, once again, we get into these markets sometimes, and again, it doesn't matter whether it's cattle, has to be, all markets get into this pattern. And right now it seems like there's no bottom. Okay. And we're short. So, I mean, obviously that's good for us, but obviously not good for farmers and producers, which obviously I would care more about that than necessarily being right. I'd rather be long the market. But at the end of the day, they've all changed direction and look pretty pathetic. Now, there will be some sharp rallies there. The real question is where will they find a bottom? And again, that's really the key, is looking for the markets themselves, the cattle markets to locate a bottom. And of course, the hogs too. Hogs did have a slight up week last week, but they're brutal, okay, right now. And again, we said during the week that we expected to see a limit up move, and we got it on Friday. But overall, the entire ag space looks pretty ugly at the moment. Okay, that will change. The question is when. But if it didn't change and it didn't even get basically a reaction off of the tariffs, which goes back to showing you that the news is worthless. Okay, but you look at things that are happening, okay, around markets, okay, and you look for stories of things that will help you decipher, but it still comes back down to what? One thing, okay? The only thing we really care about is price, okay? Crude oil, ugly. As we said, we expected the high 40s, okay? Well, it got down to about 49.30, I believe, was the low last week. Another miserable week. It's now down almost 30% from that spike high, all right? And it looks like it's going lower. I'm going to say now that we're going to see our new target is the mid-40s. That doesn't mean there won't be a bounce. Watch 52 and 54 on the upside, okay? But overall, this could get and should get probably pretty ugly, okay? If the coronavirus has any problems, okay, because we've already stopped a lot of shipments, right? We've already stopped a lot of flying to China. So what does that mean? Well, I mean, again, we're not fundamentalists, but what it does mean is that the glut of supply is going to continue to grow, okay? You've got OPEC out there panicking, trying to figure out how to cut production, yet they can't stop the bleeding in prices. So you got all these things combined into an ugly technical pattern. Now, based on the way crude looks, it should get some sort of a bounce, but overall, okay, it looks like it's going significantly lower. And we haven't talked about this, Rob, but Bitcoin is back above 10,000 or poked its head above 10,000. Again, we are believers in the crypto world. It's just a question of which is going to be the right crypto overall when it's all said and done. But we are definitely believers in there. But I think as you go into this week, okay, I think first of all, you got to see how the markets react. Okay, you have to look for opportunity. But we've got, there's a lot of positive data out there, but most of it I have to believe is probably priced in. Now, we're not calling this a bubble, as many would like to call this a bubble, but we are saying that it is you can trade both sides. And the biggest message I can pass on to you from here is trade whatever you want, but know your exit. Okay, that's really what it comes down to. Know where you're getting out if you're wrong. This is Bubba's Bottom Line. Todd, Bubba Harvard. We're going to step out for a break, and we'll come back with my commentary after the break with more of Bubba's Bottom Line. Okay, kids. Well, yesterday, great webinar on our mini and micro. On our equity portfolios. We did the mini and micros last week, but again, if you want to check out any of our services, all you have to do is go to bubbatrading.com or email me, and I'll send you the videos. You can watch them. You can look at them. You can make your own decision. Look, I don't care if you come or not. Okay, the real fact is I only want people that want to be here anyway. So it's no big deal with me. But some of the things I do are unbelievable, especially the hedging model and the mechanical trading are unbelievable for individuals because they keep you in the markets and they keep you out of trouble. Okay, but in the meantime, you're welcome to check it out. You can email me at bubba@bubbatrading.com. And of course, don't forget about Tradier. That is our equity brokerage partner, which will offer you basically free commissions and real free, not that Thinkorswim free at 65 cents, okay, or Schwab, whatever. In the meantime, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to my commentary. Welcome back. It is Bubba's Bottom Line. It is Sunday. It is the February 11th. And of course, it's time for my weekly commentary. And I'm not going to be too controversial today. Actually, I'm going to talk to more of you about trading and about investing and about what may or may not happen in markets and what you can do to avoid the pitfalls. Okay. Again, we've got obviously a ton of news out there between the jobs, the election, the impeachment, the earnings. Okay. And yet markets continue to push higher. Now we are seeing, I'm not going to call this irrational exuberance yet. I'm not going to call this 1999 all over again. I'm going to say to you, it is time for you to be careful. Okay. But more importantly, okay, when you look at markets, don't watch the news. Don't listen to these idiots on TV that have no clue, that have an agenda, that are meant to drive you, whether it be somebody who's a guest or even the host. Most of the hosts, okay, don't know crap anyways, okay? They would know a market if it hit them in the head, okay? So understand what you're trying to accomplish, what your goals are, okay? And don't try to be smarter than the market because you're not, okay? That's the biggest key. We all think that we know better, okay, when price dictates everything we need to know, okay? So as we look at it, okay, pick your spots. Now, again, if you're just a straight investor, even if you're not hedging, companies that make money are going to be in business. And over years and years and years, the companies that did make money have flourished, okay? So again, look for good, solid companies if you're going to be an investor, because you shouldn't be selling out. You should never be trying to time the market, okay? But the biggest story is simple, okay? If you trade the news, you lose. It's that simple. Follow price, follow good companies, be willing to hold on. And if you're a trader, make sure you know your exit. In the meantime, this is Bubba's Bottom Line for Sunday, February the 11th, 2020. We have no football. Yet March Madness coming soon, and baseball's pitchers and catches report. So we'll have some fun there. In the meantime, have a great weekend, everybody. As always, I thank you for being a part of the show. And of course, let's get some more laughs this week from the left on some of the ignorance that they create. We'll see you next week, everybody. Or we'll see you tomorrow with Bubba's Daily Update. Have a great week, everybody. We'll see you later.